this morning. Let me get up, kill the lights, get my computer glasses on. Okay, in business. Good morning, everybody. Hope everyone's doing well. We are in for an interesting day, to say the least. So, hold on a second. Okay, hold on one second here. Let's see. Chart 14. Hold on one second, guys. I got to open a chart book really quick. Nope, that's not it. Interesting, because that is not what. Hold on one second. I apologize. I will get to this in just. There we go. And okay, there we are. Okay, so good morning. I apologize for the delay. Welcome to everyone who's on YouTube. Let's get started this morning. So importantly, we are gapping up. We have multiple days up in a row. And what I find is that people want to short these gap ups. And that may or may not be accurate. I don't. The reason why is banks led the rally on Friday. We are due for a pullback. I think the easier way to play this trade, the trading will be to the long side. I'm hoping for a pullback, but I'm not going to be aggressive in the short for two reasons. It takes a lot of energy, even when you know exactly what you're doing, to make the short work. If I do short, it'll be a scalp, right? But I want to be clear. Your easier trade should be on the long side. And that should be over the next couple of days. We have very little economic data over the week. Spring breaks have started around the country, and that should lead us to having consistent upside rotations in a slow environment, right? So we've already have Globex high and low. NQ's trading plus 23. They're well off its high. The Globex high was at 71.77. We're trading 71.47, so a 30-point rotation down. We'll discuss that in just a second. ES is trading plus 4 points, also well off its high, which was 27.08, I believe. 28.05. ADD's kicking in there, but 28.05 kicking in. So we're also over 10 points off the high on ES, which means, importantly, we're behind the 62 retrace. Let's take a look at that really quick so we understand that, the line in the sand, okay? So that means two things, and it's probably the most important thing we can address right now. So there's two, from a 24-hour perspective, there's two major 62 retraces we're concerned with. First of all, going into early Asia or Globex low, I believe this was our low. Maybe I'm wrong about that. I'll double check it. Okay. And we're right at the 62 retrace off the 71.30 low. So this becomes a critical line in the sand right here, the 71.4850. Behind it, so this is interesting. I don't want to short, but behind it, I know that I have a potential failed rally to the upside within the context of this immediate time frame, right? But on the larger picture, right, if I go back to the low from non-farm payrolls, I'm going to grab it from about right here since this is giving me a hard time, and I drag it up to Globex high, my 62 retrace is sitting at 70.60. So a couple of things that become pretty obvious, right? First of all, 70.60 is 100 points down from where we were, over 100 points down from where we were trading. I certainly expect responsive buyers in this location first time in general, right? So from 70.80 to 70.60, if we get into that location, I'm looking for responsive buyers. So I know behind 71.48, what are the logical targets to hit? Well, first of all, my questions that I'm going to have, and I covered this in a coaching session with a client late last week. So number one is, can I get below Friday's high, right? Even if we're behind that 62 retrace, can I get behind the 71.28, 71.29 location? Because if I can't get back into the range from Friday, all we're doing is we're doing some early profit taking and getting pushed back up, so I can be patient, right? The number two question is, from Globex high to wherever we open or whatever the swing low is, can we get back above the 50-60 over there? I'm not necessarily using the 50-60 as trade location as much as I am using it for the health of the market, or the veracity of the market in terms of the rally, right? So let's do that one more time. Number one, can I get back inside prior day's high? Very basic rules. If I'm not back inside Friday's high, there really is no short, right? All we're doing is gapping, and we're going to come in and test the top of that gap and continue higher. Then I don't really want to be aggressive on the short side, right? Number two, I'm probably going to find responsive buyers off that high immediately coming in. Now, if it's in the first 15, 20 minutes, I'm probably not trading it, but my guess would be someone's going to try to buy that, followed by value area high. Now, I said that separately, but value area high and Friday's high are identical. And if you'll go back to 2 weeks ago, starting 2 weeks ago, when we were above value area high, every time we tagged value area high for the first time off the top of that range, we were popping off for a pretty good trade to the upside. So value area high and Friday's high are equal, okay? And I would expect an attempted response back up from that level. I'm not sure that I'm trading it yet, but I do expect a response off of that, right? Additionally, if we get back inside of Friday's high, the critical area is the 50-60, and then we'll go into the chart to find the key locations. Obviously, 7100 is a round number, and the market tends to respond off round numbers, okay? I'm going to lay out the same chart on ES, and these are just the basics. And the idea behind starting at just the basics and building up to more and more technical levels is so that you have an instant, once we start trading and finding key areas, and I'm looking for responsive buyers here, and I'm working off of a 5-range chart, it's really easy to get lost in the minutia. So I'm trying to keep it on a big picture, right? And then take my entries down to a very pinpoint tactical level. So on ES, okay, so the first thing I look at, Globex low to Globex high. First thing I'm going to notice out of the gate is I've closed, right, behind my 62 retrace already. So my first question is, this morning from ES, can I get back above 27.96 3/4? Now, if I'm aggressive trader, so I'm separating out who that is, right? I'm not shorting this morning. I already figured that out for in my own trade plan. Why? I don't feel like dealing with the stress on a Monday of trying to short. If I miss it, I'll miss it, and I'll kind of go, oh, well. But I don't have any of my basics that I need to short. I have no value area sitting directly above me. I'm gapping above Friday's range. There's lots of reasons for me not to want to be short. But that doesn't mean that if you're aggressive and you're agile and you can negotiate through a difficult terrain, that shorting isn't a reasonable option for you. It's just not what I want to do this morning. I don't want to start off my week in a stressful way, and I know that I'll get some long setup sometime today. So I'm waiting for the long setup. That being said, if I can't get above 27.96 3/4, we're probably going to come in and either attempt the retest of the high at 27.92 or the gap fill, or as more prominently, the settle price of 27.88, and look for responsive buyers in that area. Notice we're almost already there. So really the question for me, because my thought process would be this, if I had to guess, is that we're going to push down and either test here, push down and test here, and then come back up into this area for a test. And then the question is, can we get above? Well, you can see they clearly tried to hold above in the overnight session twice, right? They clearly tried to hold above that 27.96 3/4. Successful consolidation above 27.96 brings a retest of the high. I will remind everyone that ES is trailing NQ pretty significantly at this point and has been. So if it plays catch up, there's a long way to play catch up. And I would have my eyes on the banks and the insurance companies because they ruled the day. And as we all know from trading on regular, going back to where we were trying to short earlier in the year, you can have a significant number of sectors within the S&P 500 weak. And when the banks and the insurance companies are strong, it can buoy the whole S&P 500, right? So again, that's another reason why I'm not overly eager to be short, is because that was the strongest sector. I've tried to short against that sector in the past, and it has been a very difficult and frustrating process. So I'm already surrendering that process pretty early, right? But that's what we're looking for. On the larger picture, okay, from a 24-hour perspective, set this thing in. Wow. From swing low prior to non-farm payrolls all the way up to last night's high, this is the 50-60, okay? 2770 to 27, let's just call it 2760 for quick conversation, right? Obviously, the 50-60 from the single day rally, the mid of that, corresponds to this right here. And you'll notice that that 2663.78 lines up with this, with the 50 retrace from Friday lines up with the 62 retrace of the 24-hour. Okay, so this 2763.25, and it also corresponds with the structure that we had prior to the continuation after the gap, right? Or the balance that we had at the open prior to the break. I would expect a responsive buy from 2763. I would also say if we get behind and close behind 2757.25, I would expect long liquidation from that point, or at least be on guard for long liquidation behind 2757.25. Doesn't seem very likely, granted that we're trading at 27.94, but you should have it in your notes. Okay, so I'm looking for long rotations. I'm looking for the algorithm to set me up for specific longs, which we'll cover in the room in real time, right? So now let's go look at the chart and go break down the basics of what we're looking for from structure, right? So here's my join me. Join me is up. It's on. Here's the TPO. Let's get started with the NASDAQ, and then we'll roll from there. So number one, there is no neighborhood above. This is all-time highs, right? So if we're going to draw this out, again, this is a calm approach, right? There's not that big a deal about how we're looking at this. Number one, value area high, 71.31. We're not trading below 71.31. There's absolutely no way of getting a downside rotation. It's a minimum requirement. It's Friday's high, it's value area high, so on and so forth. Even if we get inside value area high, we must then get below 7,100 to 70.94. Okay. If we can't get below 7,100 to 70.94, where I expect responsive buyers, by the way, I want to be clear, 7,100 to 70.94, somewhere in that area, maybe 5 points lower, maybe 3 points higher, but somewhere in that general area, I expect a responsive buyer and a tradable rotation back up. There is a prominent hole in the profile right behind that. We're just going to call that down to 70.89. And I will be from that 7,100 to 70.89. I will be looking for long position out of that area for a push back to 71.31 from 70.69. First to the mid of that rotation down, and then back to the high. There's a hole in the profile that's likely to give at least a scalpable trade, and that's at approximately 71.1750. I'm going to say that again. At 71.1750, I expect an attempted response back up towards 71.31. Below 71.1750, the logical location is 7,100 to 70.89. Behind 70.89, value area low, there's an anomaly right in here around 70.61. There's a lot to repair from Friday in both charts. Okay, 70.71.25 is value area low. We don't get below and consolidate below value area low. there is really no short. So you want to draw that 70, 71 and 3/4 because you got to get below there to get any corrective move back to the downside. And importantly, there's a hole in the profile starting at 70, 58, 75, and the chart is repaired at 70, 45 and 1/4. I intend to be long out of this location. The best thing that would be possible is we actually trade behind 70, 45 and 1/4. And I'm going to give an overnight example in just a second. We trade behind 70, 45 and 1/4, get back above 70, 45 and 1/4 and push. It's highly likely that we don't make it past the 70, 58. It's a 100-point stretch at 70, 58. It's prime for a big response out of there. So I'll be watching this area closely. So to re-highlight my areas where I'm looking long specifically, my best areas are from 7100 to 7089, followed by 7058 to 7045. And then the next best would be the 7061 to 7071. Can't be any clearer than that. I expect a response off of 7017, but I expect it to be a scalp more than the low of the day. Okay. Any questions about NQ? I don't think there's any point in discussing these lower levels because I don't expect the market to fall apart. So I'm not going to even waste anyone's time on discussing that. I doubt we even get down to the 745, 7058. It'd be a gift if we did. The only thing to keep in mind if we get down here, right, is to make sure we're not in trend day down, but hard to imagine how that develops. Okay, I don't see any news. Let's go look at, and then I'm going to give an example of the auction being complete to the upside in ES, and we'll work from there. On ES, these all lines from my prior work. Okay. So we're going to draw a line on Friday's high because we actually have resistance above. Okay. That was the old swing high. We obviously cleared it. The overnight high, just so we can go see, was 2804, was it? Was that right? 2805 and 1/4. Close enough for hand grenades. Really? There we go. So let's go see what we have here. Okay, there we are. See where that 2805 and 1/4 was? See how, so this is important, guys, because if this happens intraday, it's the same read, okay? See how we have the TPO point of control, the TPO point of control, the volume point of control is down here. The TPO point of control got exceeded. Remember the rule, if the volume point of control and the TPO point of control aren't in the same place, the effectiveness or the strength of those two indicators or those 2 points on the chart are weaker. But what we also had was an anomaly in the profile there, and there was nothing to repair immediately above. Okay, so that's important. So when we traded above 2805, right, which is where this anomaly ends, we traded up, and it's actually slightly below. If we stretch this out, it looks like this. So see, it was at 2803. Okay, so this is important because this is exactly what I am looking for in real time when I'm trading. Here's 2803 on the profile overnight. Okay, see how we traded above, established above, and then closed back below and backside tested exactly that 2803. I am looking for this exact setup. This is the best setup because it usually sets up for nice fat rotations back down. I'll look up for the same setup in the RTH or regular trading hours. So I'm being very specific about what I'm looking for. The profile from the second, the auction is complete at 2803. If we get above 2803 and then we get back below it, I'm hoping for a backside test or as close to it as I can get for a rotation back to the downside. Okay, can't be any clearer than that. If you want an example of what the auction looks like when it completes the profile to the upside, when it completes the auction and then traps back underneath, this is a perfect picture of exactly what I look for, both long and short. You want to know what it looks like long? Flip the picture upside down. That's what it looks like long. It gets past it, closes back above. When it's a highly volatile market, it'll usually whip around. When we're not highly volatile, It usually just does a pretty technical pinpoint pattern, but either way, it's important to know we've traded above, we've closed back below, auction complete. There's nothing left for the auction to do on the upside. Down the profit taking rolls. Hopefully that makes sense to everybody. Okay, so let's go back to this other picture really quick. Above, if we can hold, now the flip side of the story is if we can hold above 2805, the logical target, notice there's nothing wrong with this profile here to the left. Notice that the TPO point of control and the volume point of control are together. This is the logical first major resistance area, 2828 to 2830, which is a good 36 points up and totally achievable. We've been doing 20 to 30 point ranges in ES, right? And more importantly, a massive freaking hole in the profile between 2834 and 2841. If I were an options trader or a swing trader, I am looking to load up for a rotation back down out of that area. Can't be any clearer than that. High odds location number 1, high odds location number 2, and then I'm looking for patterns in both locations for my scalpers and my intraday day traders that confirm that we've gotten behind our last best buyer and or we're underneath and ready to push back down, either by getting above, dropping back below, tick divergence. We have a whole array of tools that we can use to figure out our key locations up here, right? So from a long perspective, coming back over here, from a long perspective, the best place, in my humble opinion, to take a trade is between 2777 and 2774. There's a huge hole in the profile. There's an anomaly here that needs to be repaired, right? The point of control and the TPO point of control and the volume point of control are separated. There's a small little tiny hole in the profile, which probably gets a response in that 87 to 86, which I believe is marked on the chart. This probably gets a response back up. The question is, can it get past 2789 once it trades in here? Failure to get back above 2789. I don't think that TPO volume point of control, that TPO point of control holds. It was not very thick or significant. And that makes that 77 to 74. It makes it a 20-point rotation down. It's a logical location. My second highest odds area starts at 2766 down to 2760, with the ideal location being the exact picture I just showed you from overnight. We trade below 2760, get back above 2760, and I would say that's a moonshot back to inside value area low, which is at 2770, right? So from 2760, I'm shooting from 2770 to 2777. My guess is that we are simply going to hold here the first time in and find it. Either we're going to sit there and chop around and then push out, or we shoot in and shoot out. One of the two trading patterns in there, right? And either way, I'm probably focused pretty hard on looking for longs out of this location. I want to reiterate, I've taken short off my menu unless it's become blatantly obvious that we are rolling to the downside. What will be blatantly obvious? Okay, so first of all, tick will get negative. Oops, didn't mean to do that. There we go. Let's close this. Okay. Tick will get, I'll insert it here. Tick will get below 0 and stay below 0, and we'll be printing predominantly between 0 and negative 600. Clue number 1, right? Clue number 2, both NASDAQ and ES will be trading below Friday's high. Doesn't do you any good to get ES below Friday's high and have NASDAQ hanging out. Guess what? It's just going to hang it up, pull it up, and push it higher, right? We will be below the settle price from Friday, right? And we will be behind the 62 retraces. All of those, and then the rotations down will be larger than the rotations up. Are we primed for profit taking? Hell yeah, we're primed for profit taking. But I need to see evidence of it because it cost me a lot of money in the past by being aggressive at new all-time highs. And not only, and even if it didn't cost me money, it cost me emotional energy and stress that I didn't want to have to experience, right? So that's my trade plan for the day. I'm looking long. I'm looking for key locations to get me long. And if I short, my shorts will be scalps. And if I am long, I will be looking for locations where I can push my long from, or I will be making attempts to push my long trailers significantly unless any of the above happens, meaning, which I listed before, meaning predominantly negative tick, both markets below Friday's high, rotations to the downside larger than rotations to the upside. My guess is, and my history tells me, that in environments like this, we will have open auction. Today, it's Monday. We'll have open auction. They'll chop it around, and then also be keenly aware of where first hour low is, because I'm looking for a trap where we push below first hour low, trap back above, and then push. I'll be looking for a long from that location. If we open up and trend up today, I will shrug my shoulders because I'm not buying it without seeing what the temperament is of the market today. But with banks leading, it's entirely possible that we have another strong day up today. So that's my 2 cents. I'm not aggressive out of the gate. I'm waiting patiently, and that's it. Anyone have any questions over the trade plan? And the zones are obviously the key locations, and those are already laid out for members in the room, and they're obviously up here on the screen. I don't see my Skype lighting up. I don't see my chat lighting up, so I'm going to assume there's no questions. I'm going to refill coffee. Guys in the YouTube stream, if you'd like to join us on a regular basis or just have a 5-day pass, you can email me at tradertough@gmail.com, and I'll be happy to send a 5-day pass. Trade smart, don't blow up, and follow your process. Oh, and before I cut that off, I totally forgot. A, if you like the broadcast, please hit the like button. And number 2, past performance is not indicative of future results, right? This is for educational purposes only, and I'm sharing my trade plan with you in hopes it'll make you a better trader. But please follow your own process and your own trade plan. No one trades perfectly, right? Especially day traders. We lose money from time to time, if not often. So at any rate, have a great day, and we'll talk to you soon. Guys in the room, I'll be right in there after I take a quick break. Guys on YouTube, thanks for joining. Have a great day.